Yeah, morning, Chase. A pretty lively trading session playing through, certainly in treasuries and also in the FX market. The eyes of the market was very much firmly on the US CPI print, where we saw core CPI coming out at 0.32 of 1% month on month. We saw the headline number coming out at 40 basis points. Now, if you go into the sub-components of the various aspects, we saw core services up 0.57 of 1%, shelter up 0.65 of 1%. And then if you look at the core services ex-shelter number, that came out at 0.46 of 1%. So these CPI numbers in a holistic fashion were hotter than what the market was looking for in terms of where economists were calling for this, but also in the CPI fixing basket as well. So, yeah, certainly that's thrown us off a little bit. Now, in terms of rates pricing on the reaction, no real moves for November. We're pricing about 3 basis points there. So the market's still firmly of the belief that rates are going to be kept on hold. There's been a little bit of a move up in the December number. We're pricing about 9 basis points of tights. For that gives us about a 34% chance of that situation. So the door is open for a rate hike, but the market's still saying on balance that we're going to see rates being kept on hold. If you go into the fixed income market, the reaction in twos was fairly pronounced. We saw yields moving up from about 5% up to 5.8%, and we trailed about a 4 basis point range into the close. It's the long end of the curve which has seen the most action from shorts. There wasn't an initial much of a pop, I suppose. We saw tens move up about 4 basis points on the CPI number. But there's been relentless selling right to where we are at the moment, where you can see some quite pronounced net change. I think if you go into the ultra long end in the 30-year treasuries, we're sitting up about 18 basis points higher on the net change, and real rates on 30s are up about 16 basis points. That's a material shift playing through. Now, we did see the Treasury Department issue $20 billion of notes there, and the bid to cover came out at 2.3 times, which was 2.35 times, which was pretty poor, and that tailed at 3.7 basis points as well. So I think that sort of head off the long end as well, and you can see some fairly pronounced moves. Now, in the equity markets, on the CPI number, we're trading around 44.28 or so on the S&P futures. That dropped down to a low of 43.55. So, yeah, decent moves to the downside. But we've just had a gradual climb back up into the close. The net change in cash markets has been negative, and certainly you've seen that in the S&P and Nasdaq. But the Russell's really where you've been seeing the underperformance there, and that market closing down about 2% or so at the moment. Go into sectors, and you can see broad-based selling playing through. Energies that are held up pretty well, tech's held up pretty well, but you can see utilities and materials have really underperformed on the trading session. We've got about 16% of stocks in the S&P which have closed high, so pretty poor breadth playing through. You can go into FX markets and you can see some big net changes playing through, certainly in the Aussie and the Kiwi. The high beta plays have been hit pretty hard. You can see the Aussies traded down to a low of 63.07. We've got our eyes on that recent low of 62.85. So the dollar working pretty well on the trading session. We've got the Dixie sitting up about 0.7%. Eyes on dollar yen. We're not a million miles back from 150, so there could be some headlines playing through fairly shortly about the idea that someone's ringing around the houses looking for bids and looking for quotes playing through. So that'd be quite interesting to watch that dollar yen pair as well. Now, FX in commodity markets, we're seeing crude holding up pretty well, and gold, considering the move in real rates on the long end, and also in that dollar strength, is actually only down about $5. So I think that's a net win for the gold bulls, to be honest. Now, if we go into the trading session ahead, of course, we've got our eyes firmly on US banks. We do have JP Morgan, we've got Citi, BlackRock, and a few others coming out with numbers in the session ahead. Our opening calls for Asia at the moment, a little bit damp. We've got the ASX down about 80 basis points, NASDAQ, something similar. It's going to be the underperformance coming from the Hang Seng. We're calling that market just under 2%, a little bit lower on that situation. So Asia's going to get off onto a weaker footing. But that CPI number, a bit concerning, but I don't think it's necessarily a game changer at this stage.